I think I would begin by saying that, these components of digital assets do not have individual ecosystems. It's really important that we're framing and developing a single infrastructure that supports the full value chain. So that needs to be front and center of the thinking. We deeply believe that custody is a core component of that offer. But unless we get that connectivity, that single end-to-end ecosystem, then you won't allow product solutions and commercializations to happen at scale. So that's the piece that's very important. We're also very cognizant that the world is still evolving. This is a new and nascent area, and we don't yet have a fully mature infrastructure. So being nimble, being flexible in the approach that you take is also important. And I would emphasize alongside that, as is the criticality to link to today's infrastructure. So ensuring that you're thinking about interoperability and, again, that broader performance across both traditional finance and digital assets. In our early experience even, that has proved to be something that we can't overlook and needs to be front of mind. In terms of the ecosystem itself for digital assets, I'd probably say that there are 2 or 3 key interdependent components. So from a trading perspective, you have the need to ensure that you can trade on chain, and that is about trading activity, that is about liquidity. You also have the piece around tokenization, which is often where the product innovation is happening and the place where you need access and distribution to be enabled from. And then you have the piece around custody, which comes back then to security, control, and safekeeping. So still the fundamentals that we know from being a custodian in the traditional finance space. So it is bringing all of that together on chain, which is critical, and only as we do that and as that takes hold more broadly across the industry will we really be able to support, the broader adoption, the growth in digital assets, the increased demand coming from investors, and all the things that we're seeing. Again, that's the pieces in the technology space, but it doesn't stop there. So elements in terms of operational readiness and also regulatory support and landscape are mission critical. At Standard Chartered, we found in our initial product rollouts the importance of having strong engagement with regulators, again, to discuss, to collaborate together, to ensure we have a good understanding of their intention and that we make sure that the control, discipline, the level of compliance that we set up in the infrastructure is, again, going to support that business and product growth going forward. Regulation needs to be at the foundation of what you're doing. I would argue that's no different from how we operate today in the traditional finance space. And it is regulation that sets up that landscape, that gives you the rules of the road, that enables you to think about how you will enable your products and services coming from the appropriate governance, control, discipline, particularly around safekeeping of assets. And I think you can, develop that understanding even in something like digital assets, which, as I've already said, is still reasonably new and nascent, by a consistent and proactive regulatory engagement. That is also the way that you shape and influence the sensible, practical deployment of the opportunity country by country. And that's certainly something that we've been conscious on, that we've worked on very actively in the product launches that we've already made, that I'm sure we'll talk about again in a little while. We're also maintaining a strong focus on what's the best way to develop a product and an offering that really is institutional grade. And when I mean institutional grade, that means it's something that your clients, your users of your products and services can trust very deeply, that has both the security, the scalability, that would give them the confidence they need to further develop their own solutions across this space. So as we've worked through our offering, several things have been very much front of mind. Firstly, ease of access. So we need to make sure that we're agnostic in the way that clients and the marketplace chooses to engage with us, whether that's through our own award-winning straight-to-bank solution, whether that's through APIs or through other mechanisms. That piece is very important. Alongside that, performance. So can we be 100% STP, right? The industry has craved that for such a long time. When you're setting up new infrastructure, you have the opportunity to come at that afresh and get that level of STP 100% from day one. So that's been an imperative for us. We've also thought as well about our wallet infrastructure. So the wallet infrastructure that we have is a leading air-gapped solution. It actually is 100% cold wallet, but operates with the speed of hot wallet. So the best worlds in terms of safety, security, coupled then with immediacy of access. Security still is very important. So thinking around end-to-end encryption, thinking around secure transaction signing, all of those elements, again, are deeply baked into the fabric of the infrastructure that we've built. Compliance as well. So whether that's compliance with global or local regulations, thinking around, AML, thinking around sanctions, thinking around travel rules and other aspects. Again, taking the knowledge that we have in today's world and ensuring that that's replicated in the digital asset world has been important. And then finally, both that internal and external assurance and that constant testing. So whether it's bank security audits, whether it's the continuous monitoring, penetration testing that we undertake, also ensuring our compliance with SOX and ISO and other things. So it's a combination of a lot of features that we think then enable us to respond strongly to that need for a trust-based solution built on highest levels of security. Let me start by saying that today Standard Chartered is the only GSIB that is offering custody of crypto assets, and we're offering those services broadly with the same terms and conditions that you would expect of a custodian, safekeeping, equities, bonds, and other more traditional securities. Our first product launch was in the UAE. That was a launch that we made at the end of 2024, choosing a market that was keen to participate in digital assets, choosing a market where we had very good regulator engagement, and quickly learned some of those earlier, I guess, sort of the prescription for success. So that was our first launch. We've then continued, and our crypto custody launch in Luxembourg happened at the beginning of this year. And the new news for just this week are the third market that we will go live in is here in Hong Kong. So we'll be live with our crypto custody solution from January next year. We're also looking at other markets in Asia, including in Singapore. But also here in Hong Kong, one of our leadership product rollouts has been the work that we've done on tokenization. So we are the service provider for China Asset Management, and China Asset Management were the first asset manager in the region to tokenize a retail money market fund. And that was a product that initially launched in February this year, and we're continuing to roll out and enhance the solutions working with that asset manager, but also now engaging with other asset managers. So our anticipation and the level of interest we're seeing here in Hong Kong for tokenized money market funds actually is really exciting. So I think one of the exciting things now we're seeing is that there is a trajectory and an adoption coming from both, or demands coming from both retail clients and from institutional clients. And some of the backdrop or the factors that I mentioned just now, I think are driving that greater institutional adoption. And we're now at the point where you're seeing proven use cases, live opportunity within market, whether that's driven because investors are looking for alpha, whether they're looking for new liquidity, whether they're looking for new I guess, sort of asset diversification. So all of the right things are driving that increased adoption, which is exciting. And as I mentioned just now, as you get proven players coming into the market, not just Standard Chartered, others too, that's actually sort of lowering one of what previously was seen to be a barrier to entry. In terms of Asia, I really think it's an exciting opportunity, and there are some features here that I think will mean that the rate of adoption and the progress will be super fast. Firstly, you have large pools of capital. Secondly, you have a progressive regulatory environment, particularly across the key jurisdictions. And the amount of fintech infrastructure development, I think, is also very well established in the region. And if you look at some of the initiatives that we've had, whether it's Ensemble, whether it's Guardian, so some of those hub initiatives in Hong Kong and Singapore, for me, they're fantastic demonstrations how all of those things have come together and are driving some of the thinking and development that we're getting in this space. What I also do see in Asia is this very strong collaboration between the participants. So whether that's the sort of tier one banks like us that are operating in the space, whether it's the whole range of fintechs that are around, whether it's the digitally native asset managers, or even some of the platform opportunities that are launched and in play here. It's the combination of those things together that I really think will drive a very interesting and exciting trajectory here across Asia. So life is good, and there is a lot to be very optimistic about in the digital asset space here. Yes, I'm going to come back firstly to that point around interoperability. So we are not today at a point where there is full interoperability between the traditional space and the digital asset space. That's still going to take time and investment to get to a level of maturity. And again, I would argue that's one of the precursors for success to get ever wider adoption of digital assets. I also believe in that space it's a requirement to move on just from, shall I say, on-chain safekeeping to think about the whole asset servicing chain or asset servicing events that as a service provider you manage and administer for your clients and how you bring those activities on chain. So I can think around, the asset servicing pieces that you see in custody. If you look at the funds world, you can think about things like the cutting of the NAV, the transfer agency activity, etc. So, there is opportunity to reinvent the way that some of those processes work. And again, that is something that I'm beginning to see the industry start to turn its attention to. And to really scale and grow, you would, I think, quickly understand that having all attributes or aspects of asset servicing on chain will be something that we will come to understand becomes more and more important. Secondly, there's also the piece around liquidity. So today there is still fragmentation across liquidity. I think that will begin to change actually as we get more product innovation, as we get more assets being digitized, through tokenization. So whether that's public funds, whether that's other RWA, as we call it, or real world assets, what happens on the private market side, all of that will bring new and increased liquidity opportunity into the market. And I think that will be driven as you get high net worth, ultra high net worths, family offices and others beginning to want to commit more into the digital assets landscape. That's certainly a point in talking to one or two wealth managers here in Hong Kong this week that I've picked up quite strongly. So the demand is there. The industry will need to respond to that. And again, that will be another sort of propellant, I think, in the way that the industry takes hold more broadly. And as I'm sitting here, it's making me think, well, will there be a year when we stop using the terms global custodian, sub-custodian, domestic custodian? And I'm going to say yes, we probably will. So the environment we're moving into now, it does come back to the creation of this new ecosystem for a different set of participants within that ecosystem, each coming together with expertise and a differentiated capability to contribute. But I think we will lose that framing and, badging maybe as how we were seen historically. And it will be that broader open banking environment. We talk a lot about open banking now, not just in the context of custody, but more broadly across financial services. And so I think that's the piece that will cast and shape how the post-trade world operates going forward. And you will be using a range of partners, right? You will be using other banks, you will be using fintechs, you will be engaging with virtual exchanges. So lots of things that we haven't experienced up to now, and that gives an opportunity to reset the stage. And I'll come back to your point on T+1 and accelerated settlement. If that's going to become the norm across the world, which the potential and the opportunity is definitely there, and if we're moving to an environment where over time investors will expect to trade instantaneous, to settle instantaneous 24/7, then we absolutely need to make sure that we have a full on-chain infrastructure that enables us to do it, and that's not where we are today. I think what will drive the right decision for the client will come back to what is a custodian there to do. A custodian is there to enable the connectivity between the issuer and the investor and to ensure that there is minimum friction, minimum steps, minimum latency in the chain of events. And today it's a very long chain of events between those two. So if you say that is the principle, if you are an investor, then always you should be saying, what's the easiest, smartest way that I can access the issuer, the investor opportunity that I'm looking for? And that will drive the decisions then on the asset servicing partners or others that you work with. And that's right. That's the principle that drives the decisions today. That should be the same principle that will drive those buying decisions tomorrow. Definitely the progress that we're making around accelerated settlement. There is no doubt, and we've remarked on it already, that drive for ever greater efficiency in the post-trade world, the removal of the friction and the multiple steps that we have in activity today, has to remain mission critical for anybody that operates in this space. So reflecting on the achievement of T+1 and where that started and the learnings from it, I think that's very important. That certainly for me is a tick for 2025 and setting us up for what we will do in the next few years. Secondly, and I will just mention AI here, again, another very exciting opportunity for us to continue to equip ourselves well for the future of financial services, for the future of security services. And at different states of maturity, you're beginning to see active deployment coming across organizations. Again, there isn't a single consistent journey that anyone's taking, but you're beginning to start to see that take hold, whether that's giving you efficiency in terms of how you're operating, whether that's giving you improvement to your client experience, whether that's increasing your time to market. So good opportunity there, still very new. We need to land it and land it in style. But the fact that journey has started, and I would say it's really started this year, for me is another tick in the box. And then the third area is what we spent most of our time on this morning. So the digital assets piece, and thinking about, just now seeing that you're starting to get attraction around institutional adoption, that you're seeing the bigger players enter the space, that you're starting to get the clarification around the regulatory landscape. So again, all of those things I think are what I will reflect on when we get to the end of the year and say those are the things that have really typified some of the progress that we've made in 2025. I'm super excited to have acceded the chair just in May this year. So it's a 2-year appointment. Standard Chartered has had a board seat at ISSA for very many years, and I've occupied that board seat now for all the past 6 or 7 years. So a really great opportunity. So what's ISSA all about? ISSA is really there to connect the industry, to think about driving industry and influencing industry change, and so brings together that community of market practitioners, whether custodians, whether ICSDs, whether technology providers. And as you will know, without me emphasising, the rate of change we have now in the industry is significant. So ensuring that we have a practical viewpoint and a stance on the way that the industry is moving forward is absolutely mission critical. And as an industry, we seek to further globalise our community and our membership participation. So that's caused us to take some very recent steps, including here in Asia. We have put local resource on the ground, including a Mandarin speaker, and that's with the intention to increase the amount of membership that we have coming from this part of the world. Asia continues to be very important to us. Not least, we have our next board meeting, which is also going to be hosted by colleagues here in Hong Kong. In terms of what I would want to do and what I aim to do during my 2 years in the chair, firstly, it's to maintain the momentum and the very good traction that we have, so continue to support and sponsor the work that's in train. Alongside that, I also want to develop the people agenda. We know that the world of post-trade, of security services, is around people, process and technology, and it's the people that are unique, and that talent, that workforce that we need to sustain the industry in the future, again, is important, and that's something that I want ISSA to work on a little bit more deeply over the next couple of years. So ISSA has already been very active and has a strong voice in that conversation. So we've done work on accelerated settlement is how we've badged it. Obviously, the work we did initially was very much looking at the rollout that we've seen in the Americas, particularly across North America. Clearly now the agenda currently is in Europe, so also thinking about UK within that context. That has a greater degree of complexity than we have seen in the US. So we will take the learnings from the US, help the industry then to take that next step in deployment across Europe. And I think that's very important because when we come to Asia, and it will be when we come to Asia, the learnings that we take then from Europe also will augment the thinking. And I think in terms of the priority, it's, yes, technology is important, but, the technology today actually enables us to already accommodate settlement in an accelerated environment, even T+0 in some infrastructures. But it's much more around the process, the upstream and downstream processes around settlement that are as critical. So we anticipate clients and service providers of clients will need to make operational change. And it's getting that piece right and properly in place before we can see a significant rollout more broadly across the globe.